The quantums can't affect the hash rate, which means the mining itself or the verification of new blocks. That's not an immediate threat with quantum, but it is with any public key exposed. And that's, for anyone listening, was a reason not to get your public key out there, because you can leave this trace behind that can be exploited later.
Correct. You don't want your public key known.
Right.
But the thing is, you look at, tremendous innovation in the Bitcoin space, like the Lightning Network, for example, and Jack, Bitcoin, Twitter founder Jack, I got a lot of respect for that guy. But Square just integrated Lightning with like 4.5 million vendors, right? So the Lightning Network exposes public keys.
Okay.
So as that grows, we have another issue, and so on, right? So it's very important that people understand that it's your public key, and deriving the private key from your public key is the risk.
Okay.
Now, we go to the smart contract platforms like Ethereum and Solana and so on. All the public keys are known by default. That's how the system works, right? You can see everybody's public key. You can see the amount of ETH and other whatever stable coins or other tokens. So that problem is even harder. And then you have DeFi, and you have this smart contract capability and composability and so on. So it becomes very complicated. Now, I also wrote an article that basically talks about stablecoins as the first, let's say, exodus, in my opinion, wherein what we see today is very quickly we're heading towards $1 trillion of stablecoins on chain. One of the use cases, I think probably the preeminent use case of Ethereum and a lot of the smart contract platforms, frankly, is that they have propagated dollar hegemony globally. I actually think it's really good for the world if the US dollar is kind of the main currency. And so when you're in a developing country and, in that country it might be difficult to get a US dollar bank account, you can just download a wallet, MetaMask, Phantom, whatever wallet you want, and suddenly you have a US dollar bank account because you can accept stablecoins. And I think this is a fundamental good for the world. That's just my opinion. And so as we head towards $1 trillion of stablecoins, and again, we know that stablecoins are the main trading pair against Bitcoin. It's actually very little USD. Well, think about who is deploying stablecoins on chain. At this point, it's quite institutional. So you've got smart capital, smart money allocators who do things like, you see something like Morpho, for example, which is a lending protocol on Ethereum where you can create your own vault and curate risk and offer up that basically basket of lending services to the market. And so, you can generate yield. Aave is another example. You can put your stable coins in Aave and earn interest, okay? So these smart capital allocators are the ones who do things like, send $100 million to Tether or Circle and through a bank wire, and then they take the stable coins and deploy them on chain to earn yield in a variety of different strategies. Okay, so smart capital allocators are currently earning, in most cases, if they're doing a good job, more yield than they would just holding treasuries in a bank account. And that's the reason why they use DeFi. And that's one of the reasons why this institutional growth that we're seeing now, particularly on Ethereum and starting on Solana as well, is so robust. However, if you're a smart capital allocator, and I don't know, fast forward a few years, and I tell people you should look at all the roadmaps, not just one quantum company. So IonQ recently put out their roadmap, and they're talking about 2,500 logical qubits by 2028. That's enough, okay, to create a scenario where this risk of factoring private keys from public keys becomes feasible. Look at DARPA, look at Google, look at IBM, look at all of them and overlay them. And it seems to converge around 2030 based on the roadmaps. One of the things that's accelerating the roadmaps is, AI is driving tremendous algorithmic improvement, okay?
How do you get out of a rat race? How do you create wealth not only for yourself, but also for the generations to come after?
I am absolutely amazed with the quality of companies that we're getting exposure to.
We go on to Zoom calls with the innovators and the folks who are building new applications in metaverse, blockchain, artificial intelligence, decentralized finance.
What's going on, everybody? Thumbs up if you can see me.
We are focusing on
early stage investment.
And the quality of people that we're getting exposure to, whether it be Dan Tapiero with 1RT, Jason Ma from Open, Yatsu from Animoca.
It's been a phenomenal experience thus far. It has far exceeded my expectations.
We are focusing on cutting edge technologies.
I view it now as the best investment I've ever made. The upside, I view, is unlimited.
And as a retail investor, I would never get this exposure anywhere else outside of Investment Club.
See you in the investment club.
Good algorithms, it doesn't mean the quantum computers don't mean anything because qubits are inherently noisy. So you need good algorithms to cut through the noise. And so AI driving algorithmic improvements is sort of one of the vectors that's materially improved and actually, in my opinion, accelerated some of the roadmaps. Okay, so now you're a smart money allocator. You've got hundreds of millions of dollars on chain. You're earning an extra 3% or 4% above what you would with the Fed. And you're looking at this stuff and you're like, wait a minute, Larry Page or Jensen Huang, and by the way, Jensen just did a conference and he had all the quantum computing startup CEOs on stage with him. After the conference, or maybe right before, I can't remember, he was quite bearish and all the quantum stocks dumped. A couple weeks later, he changes his mind. And in fact, right now, PsiQuantum, which is one of the leading photonic wafer platforms, is doing a round. They're raising, I think, 700, 800 million at something like a 6 billion valuation. And NVIDIA is already publicly committed to taking half the round. So you see these tech luminaries, right? And they start talking about quantum, and you're a smart money allocator, in the blockchain DeFi space. And you're like, wait a minute, this risk now is unknown to me. I don't know when Q day is going to come. And I've got a tremendous amount of money fully on chain. So I'm exposed completely. Is it really worth? And in fact, especially if these guys, are public companies where they have fiduciary responsibilities, can we even take this risk?
Yeah.
Versus when you look at the Bank of International Settlements, when you look at a lot of the big banks, they're well on their way to basically, and by the way, a lot of internet browsers now are post-quantum and so on. I mean, other institutions where, they don't have to deal with decentralized governance and consensus are already taking proactive measures. So I think by that time, maybe in a few years, if you're a smart capital allocator, you're going to say, for an extra 3% on chain, potentially at the risk of 100% total loss, I think I'm going to take my stablecoins off chain and just keep them in my quantum safe bank account at JP Morgan and ride this out until I have clarity on what's going on. Okay? That I think is going to cause the first mass exodus of liquidity from blockchain systems, which goes back to my original point earlier, not just with Bitcoin, but with all blockchain networks. And I've publicly said this. I think having a strong quantum roadmap, okay, and demonstrating like measurable steps towards post-quantum resistance or post-quantum cryptography will be the most bullish indicator of price. It'll be the biggest driver of price, in my opinion. Maybe not today, but very soon, because if you imagine Solana, for example, getting there before Ethereum, well, then all the smart capital allocators are going to just move their stablecoins to Solana, right? So, and this is what I've said before, I think for these blockchain networks, post-quantum is the most important strategic priority for this reason, because when that time comes, that's where the liquidity is going to go. And if none of them are ready, all the liquidity is just going to go into post-quantum bank accounts parked at the Fed. Okay? So now here's the other way to think about it. And this will, I think, illustrate the point. Let's say our crypto ecosystem is worth $3 trillion for the sake of argument, everything in aggregate, all the market caps added up. And let's say you assign a 1% chance that the IonQ roadmap of 2028, 2,500 logical qubits is accurate. And if you assume, if that's the case, and somebody breaks elliptic curve cryptography and everyone finds out about it, that total loss is going to be close to 100%, okay? Then we should be, you do the math, 3 trillion times 1% times 100%, we should be spending 30 billion a year right now, rationally, okay, on, post-quantum like migration efforts. We currently spend fuck all, excuse my language, like basically nothing in the blockchain ecosystem. Even a guy like Hunter Beast, I would expect to see the entire institutional blockchain ecosystem supporting people like him and others in this effort. But that's not happening right now. So, you know, and really when you look at a lot of these, so there's a guy named Antonio, he's the lead post-quantum researcher at Ethereum, wonderful guy, absolutely incredible. First of all, he's a great human being, he's very smart. He just did a talk at SCC in Cannes, and I was there. I was there with a friend of mine, Melody, and you know, he outlined all the different trade-offs, and he said this is a hard problem. And you know, it's just him right now. I mean, I understand they're talking about this, but you know, we need to think about this, let's say from an Ethereum standpoint, like we need like an AWS level engineering team dedicated to this with tremendous resources where this is a priority. So does Solana. Solana, as far as I understand, is right now focused on BLS. BLS is a way of aggregating signature schemes, which, you know, would make Solana even more performant, which makes sense because right now their meme is kind of the capital markets and so on. But, you know, you look at a guy like Matt Sorg, he's a VP of technology at Solana, great guy, very smart guy. You know, I'm just saying, if you go in the BLS direction, I think in a couple of years you have to change the plumbing and you have to restart. So if these timelines continue to accelerate, and it doesn't even need to be that, it just needs to be that people believe them and start to remove liquidity from, you know, stable coins, for example, in the first instance, it's going to have a pretty devastating impact.
Hey, I know investing in crypto is scary. It takes a real leap of faith because there are so many scams, rug pulls, and bad actors out there. It's a dangerous business, which is why 95% of people lose all their money. Well, that's why I created the London Real Investment Club, so you can access the hottest deals on the planet and use the crypto bull market to create the generational wealth that you deserve. Join my team of over 100 people from around the world that are making millions of dollars behind the scenes investing in blockchain, AI, Web3 games, DeFi, Bitcoin, and more. Don't miss out. Click the link below to book a call with one of my team now. But hurry, this bull market will end soon.
I know investing in crypto can be scary. That's why you gotta join the investment club. Pull the trigger. Let's do this.